So we are doing the Feb March 2023 paper, and we are starting from sum number 18. Read clearly and properly. Okay, start.
The trader makes the following entries in his ledger. Account debited, irrecoverable debts. Account credited, Peter. What is he recording? A credit customer has failed to pay within the uh, agreed time limit. A bad debt which has been written off and now been recovered. An amount owed by a customer cannot be recovered. The trader has been unable to pay his supplier. The answer is B.
Okay, can you explain me what is the entry saying? It's bad debts debit.
Yeah, it's bad debts debit.
You're recording a loss of bad debts. So we record it when the trader is unable to pay supplier. Correct.
Yeah.
Go to the next one.
19th. The balance in the books of Julie on 1st July 2021 included the following: trade receivables 64,200, provision for doubtful debts 1284. What was the change in the provision for doubtful debts at 30th June 2022? Okay, so the trade receivable of.
So when we are calculating the change or anything, okay, we see OC ending. All the provisions we recorded on the credit side and new provisions we recorded on the debit side.
Yeah.
Change would be old minus new. Okay, if old minus new can be positive or the old minus new can be negative.
Negative.
Old provision is how much? 1284.
Yeah.
On the last date, your trade receivables was how much?
5850.
Okay, from that you will minus your new bad debts.
Yeah.
So your new bad debts is 500. Then you will get your NTR.
Yeah.
NTR is 58,000.
Yeah.
New provisions is created at 2%. Provision is always created as a percentage of your net trade receivables.
Yeah, that's true. So it'll be 2 upon 100 into 58,000.
So how much?
1160.
Okay. Now your new 1160. So your new provisions is 1160. I want to know the change. How will you get the change? Change is old minus new.
Yeah.
Okay. So old is 1284. New is 1160. What is the
So
change?
1284 minus 1160, which is equal to 124.
124. Increase or decrease?
124 decrease.
Option
D.
Go to the next one.
When valuing his closing inventory, Asim omitted goods causing 990. What is this effect for? Okay. Valuing omitted goods. To ensure that the gross profit is not overstated.
Again.
To ensure that the gross profit is not overstated.
Asim omitted goods costing 990.
So it'll be understated because you didn't do SA. Okay, gross profit not understated.
So closing inventory is understated.
Yeah.
If closing inventory is understated, so gross profit will also be
understated.
How much?
By 990.
So gross profit is understated. Okay, if gross profit is understated, profits will also be understated.
Yeah.
And equity?
Equity will be overstated. Understated. Equity will be understated.
It will also be understated. So which option?
Yeah.
Option D. Okay, go to the next one. I'm just
The owner of a restaurant is concerned about high operating costs. Which statement will show the operating costs for the year? A is bank statement, B is bank reconciliation statement, C is income statement, and D is statement of financial position. The answer is income statement and it will come under other expenses.
Which statement will show operating cost for the year? Which statement shows operating cost?
Income statement.
Okay, fine. Next one.
A business provided the following information at the end of the year. What was the bank balance? Okay. Non-current assets is debited.
Non-current assets, current assets. Capital is
Capital is all
14,100 and current liability is 800.
Miss, I didn't understand. Non-current assets is always debited.
So I'm okay. I'm making the balance sheet. I write the asset side here and the
What you
liability.
mean balance sheet? I thought you were making a this some
No.
account of.
Okay. What is the bank balance? Come on, tell me.
I'll tell you 1 second.
Is it a bank balance or a bank overdraft?
It's a 1 minute. It's a bank overdraft.
Of how much? The total assets must be equal to your total liabilities.
It's 1250.
1250 debit or credit?
1250 debit.
Credit. Bank overdraft always has a
Oh
credit.
yeah, sorry, bank overdraft credit. I thought account के perspective में said.
No. Bank overdraft always has a credit balance.
हाँ,
Can we go to the next one?
yeah. How is interest on drawings recorded in the books of a partnership? Okay,
Interest on
appropriation.
drawings will come in the partner's account. Which side?
Interest on drawing.
Drawings comes on the debit side.
So interest will also come on the debit side.
Interest on drawings comes on the debit side. So if
Yeah.
interest on drawings is debit, appropriation will be what?
Appropriation will be credit.
Credit. So in which two cases appropriation is credited?
C and D.
In C and D. Now interest on drawings, you have two options: capital account or current account.
Current account में it comes.
Okay, both the options are correct, but the more correct option is current account. Okay,
Yeah.
go to the next one.
Javed and Yani were in a
Current
partnership.
account balance.
Okay, so we have to make a current account. So should I say and you'll make?
Make a current account. Yeah, tell me, I will make it.
Okay. So on the debit side, we'll write drawings.
Is there? First read the question now. The receipt, they are sharing profits and losses how?
Equally.
The profit after appropriation is?
47,000.
That means all the appropriation is done. All the appropriation is done. That means interest on drawings, interest on capital, salary, everything is done. And the
Yeah.
profit is 47,000. What will be Rani's share of profit?
47,000 divided by 2.
It will be 47,000 divided by 2. So Yani's share of profit is 23,500.
Yeah.
Interest on capital,
2,400.
with credit side only.
Yeah, credit side.
Interest
Drawings will come on the debit side.
Why don't you read in the sequence?
Okay, fine. Interest on drawings then 600 and salary is then 3,000.
Okay. Yani's current account balance at the start of the year was 1,500 credit.
Yeah.
So I want her closing balance. It will come over here, I think. So what is her closing balance?
I'll tell you 1 second.
I will add all the things on the credit side. So if I'm adding all the things on the credit side, it is 1,500 plus 2,400 plus 23,500 plus 3,000.
It's 30,400.
30,400 minus
1 minute.
minus
1 8
18,600.
Yeah, 11,800.
So it is 11,800. Now it is appearing on the debit side, but it will be what balance?
It'll be on the credit side balance because it'll
It
be
is
brought down.
appearing on the debit side, so it is a credit balance.
Yeah.
Always the normal after bringing down balance will be your normal balance. Are you with me?
Yeah.
Okay, go to the next one.
A limited liability company is formed who has limited liabilities. Directors.
Shareholders. Who will have the limited liability? Always your owners will have limited liabilities.
Oh yeah, directors are not the owners, so it'll be
So the
shareholders.
owners will have limited liability, so shareholders will have limited.
Yeah, okay, I got it.
Go to the next one.
Which statements are correct in relation to the financial statements of a limited company? Ordinary dividend paid is shown in the income statement.
Is this correct?
No.
Where is it shown?
SOCE.
SOC. Very good. So this and this option wipes off.
Yeah. A transfer to the general reserve is shown in the statement of changes in equity. That's correct.
Okay.
Yeah, Miss, the answer is C.
Okay. But I still want you to read the other options.
Okay. Debentures issued as shown in the statement of changes in equity. It's shown in the balance sheet, so that's wrong. And proposed dividend is not shown in the income statement. That's correct.
Option is C. Go to the next one.
Huh. How is profit calculated from incomplete records?
We
But
have
this
a
is
formula, right?
CCD plus AC minus OC.
That means closing capital plus drawing.
Yeah, so where is that
This
option?
minus drawing. So this is not there.
Yeah,
CCD plus drawing. Minus OC.
yeah, okay, got it. So the option's B.
Option is B.
Hmm.
Okay. Go to the
Hmm.
next one.
A company provided the following list of balances at 30th September 2022. What is the current ratio? Okay, I need to find
Current ratio is what?
current assets upon current liability.
Current assets over current liability. Now let's see the current assets. Let's mark the current assets.
Current asset will be cash in hand.
Then
Bank loan repayable 31st December 2022 will be current liability because it's an overdraft.
it's not an overdraft, it is payable within a year.
Okay.
Then
Bank, this will be non-current liability, so it won't come. Bank overdraft will come in current liability. Trade receivables is current asset. Other receivables is current asset. Inventory is current asset. Trade payable is current liability. And other payable is current liability. So I'll add all the current liabilities in the current asset now.
so it will be 150,
Hmm.
2000 plus 400. Current asset is plus 8,000 plus 275 plus 24,000 minus 6,000 minus 95. So what is the total of current assets? It's
1 minute, I'm coming.
plus 8,000 plus 275 plus 24,000. Total of current asset is 32,425 and total of current liability is 2,400 plus 6,000 plus 95, 8495.
Yeah, miss.
So 32,425 divided by 8495. It is
3.81.
3.816. So it is 3.82 is to 1.
Yeah.
Okay. They want to know the value of the current assets.
Oh,
Okay.
okay.
So they given us the asset test ratio.
Yeah.
Asset test ratio is what?
Uh, Current asset minus closing inventory upon current liability.
Minus closing inventory upon current liability.
Yeah.
What is current asset? I don't know, but I know this is 2.5.
Yeah.
Current assets I have to find.
And closing
Inventory
inventory is
6,000
6,000
and current
upon
liability is
12,000.
12,000. Correct?
So do I have to do cross multiply for this?
Yeah, first I will do cross multiply, so it will become 2.5 into 12,000 is
Upon 6,000.
current assets minus 6,000. 2.5 into 12,000 will give you 30,000. Minus 6,000 I will take over here, so it will become plus 6,000 is
Yeah.
equal to current assets.
Current assets is equal to
So
36,000.
my current assets will be 36,000. Option
Yeah, miss, I'm just checking if it's. Yeah. The option is D. A trader wants to a trader wants to improve her gross margin. How can this be done? Reducing administrative expenses, reducing depreciation for equipment, reducing cash discount, and reduction rate of trade discount. Depreciation will go because it doesn't come near gross.
the gross profit or gross margin or markup is related to items that appear in the trading section,
Yeah,
that appear in the trading section of income statement, right?
yeah,
So items that appear in the trading section of the income statement would be purchases, sales, closing inventory, and total
yeah.
inventory. These are the things administrative expenses would come in the income statement. Depreciation would come in the income statement. Cash discount would come in the income statement. Trade discount, that means it is going to directly affect my purchases or sales.
Oh, yeah, okay, correct.
Yeah.
Huh.
So if I reduce the rate of trade discount, it is has
Hmm.
a direct impact on my gross profit.
Yeah, miss, I got it.
So the option would be D.
B.
Go to the next one.
To finance further expansion, a business owner paid $10,000 into business bank account. In the ledger, a debit entry was made in the bank account and a credit entry was made in the capital account. Which accounting principles were applied? Okay. Business entity business entity is keeping the business separate from owner.
So
So that
whenever
is
you
correct.
pass an entry, whenever you pass an entry for capital and drawings, that
Hmm.
means you treat the owner separate and business separate.
Separate. Yeah.
So whenever you're passing these entries, you're basically following the accounting principle of business entity. You're
Hmm.
following the accounting principle of business
Business
entity. So you are doing business entity, so it is A and B. Now,
entity.
it's not prudence. Prudence ensures that non-current.
Prudence is not non-current asset now, and it's duality, and I have a reason also
So,
because a double entry has been made.
so it is business entity and duality.
It's
Because,
B, yeah.
yeah, we are following double entry.
Hmm.
Okay, I think this one was missed over there. Come on,
Huh,
next.
okay. A golf club sells refreshments to its members. Suppliers for refreshments were owed 250 on 1st January and 400 on December 2022. Payments to suppliers during the year were 7,200. Okay, I know what to do. You have to make a subscription account.
Come on, how do you make the subscription account?
OPOP IB.
But why you want to make subscription account? What are they asking you?
Oh, you have to find the sales.
What are they asking you?
You have to find the sales. Sorry, I didn't read the question only.
They want the cost of sales of refreshments. So when I find the cost of sales of refreshments, I will do CPO. Okay? For purchases. Cost of sales means opening and refreshments plus purchases of refreshments minus the closing refreshments.
Okay.
Okay? And for
Yeah.
purchases of refreshment, I will do CTO.
Okay.
So what is closing?
Closing is 100. The
Closing
inventory
suppliers.
end of it.
See,
No way.
suppliers of refreshments owed 250 on
Yeah.
1st Jan. So opening suppliers is 250.
Yeah.
Okay. And 400 on 31st December. So closing suppliers is 400. Payment to suppliers is 7,200.
So that's purchases.
So that will give you purchases. For purchases, you will always do CPO, closing suppliers plus payment to suppliers minus opening suppliers.
Okay.
Okay?
Yeah.
So
7350.
7350 is my purchases.
And you have to do minus 100 in this because it's written over there.
Inventory at the end of the year is 100. It is 100 less than the inventory at the start of the year. So if
Yeah.
inventory at the start of the year is 200, so inventory at the end would be 100.
You have to add it now, miss.
In short, you are adding it because opening minus closing.
Yeah, okay.
Opening minus closing is the difference is 100 positive.
Yeah.
So you just have to take an imaginary figure and make the opening 100 more and closing 100 less.
Yeah, okay.
Okay.
So it's 7450.
What is it?
7450.
450. How? Yeah, 7450. So it is D.
Yeah, you added now, so it's 7450.
Yeah.
A social club provided the following information. Subscription paid in advance, 31st December 2021 is 40.
So this is
Subscription paid
last
in
year.
advance. Yeah, this is last day.
This is current year.
Miss, so in short, that's opening and this is closing, right?
And subscription received during the year is 660.
Bank, yeah.
So I have to show the amount in the income statement.
OPOP
So
ID.
I can also do prepaid of the current year is done what?
Yeah.
Subtracted.
Hmm.
So prepaid of the last year will be added. Yes?
Miss, can we just do OPOP IB? I get confused in this.
Just do this now. Prepaid of the current year is subtracted and last year is added.
Okay.
So 660. Current year
Huh.
prepaid minus last year add.
Oh, okay, fine. I have to minus current year and add last year.
Yeah, because it's prepaid.
Okay, and if it's outstanding, add last year minus current year.
Add current year minus last year.
Yeah, I said that one. Okay.
Okay.
650 is the answer.
660 minus 50 minus 40. So it is 57.
650.
Sorry. 660
650.
minus 50 plus 40.
650.
Go to the next one.
A manufacturing business provided the following information for the year ended 30th November 2022. Factory supervisor salary 25,000, factory heat and light
I
5,000.
want a direct cost.
Okay, direct cost is direct labor
Direct
plus
material consumed plus direct
direct,
labor plus direct expenses. Yes,
okay, yeah,
this is GMC.
hmm,
This is DM.
direct expense.
DM.
Miss, won't factory supervisor's salary will be
FOH.
oh, okay,
Is there any direct expenses over here? That
no,
is royalties or hire of special plant. Is it here?
no,
No. So only addition of this both is the prime
It-
cost or the direct cost.
yeah, I got it. It's 111000. So it's option A.
Option A. Go to the next one.
Where is work in progress shown in the statement of financial position of a manufacturing business? Hey?
A manufacturing business has three types of inventory.
Yeah,
Yeah,
open, raw
has
material,
three types of inventory: raw material, work in progress,
work
and
in
finished
progress.
goods.
Yeah.
And these types and these inventories, where will they be shown? Current
Hmm.
assets. In
All
your
inventory.
statement of financial position.
Okay.
In the statement of financial position, where will the inventory be shown?
Current asset.
Current assets. So where it will be shown? Current
A.
assets. Done?
Yeah.